Good evening to everyone. We are live here filming from Virginia. My name is Ryan. This is the Independent Investor Channel. We have made a habit of offering a live feed every Friday night to field questions from the subscriber base. And we're going to keep that going this evening. I'm going to allow a couple minutes for the group to come in, give me a chance to address some of your questions. Talk about the week in the stock market, which I actually personally thought was actually kind of an up and down week. I was just talking with Doug Whitaker before the live feed. And it seemed to me like there was a couple of rollover days, which is actually kind of, if you want to know my particular feeling and pulse and opinion about the stock market, and really that's kind of all anybody could ever come up with. To explain what's going on in the stock market right now, because if you're as confused as me, it'll make me feel a little bit better. But I tend to be a lot more steadfast in my approaching of the stock market when it is a little bit more off of either a low or a high. I tend to work a little bit better when we're not pushing the envelope. I'm just not sure, quite frankly, where the stock market is going to go from here. And it brings me back to, some of my recommendations. I'm extremely encouraged by the growth of the channel. And it really has a lot to do with a lot of referrals that I'm getting through the channel. Please understand if I don't get back to you guys right away on the comments. I'm extremely with over we're approaching 7,500 subscribers. We should be by Thanksgiving. We should be at 10,000 at this rate, which is extremely exciting. And humbling, to be honest. I would have never really thought we could have got that far that fast. But at the same time, I'm validating for myself in great discussion through Facebook, through direct messaging, and also through direct help. I see Noella on the line. Hello, it's so good to see you. I've had some very, very good interactions with folks, and I wish we could evolve this to more of a cross dialogue. I know I have to read the questions in these live feeds to be able to get to you guys, and I'm going to allow some of the group to make their way in here. And have their questions thrown either to the community or to me directly. But I did want to give you guys an update. I know I had mentioned my plans with the M1 Finance account. It is really one of my favorite options for new investors. For me personally, I will be transitioning away from M1 and coming back to Merrill Edge. I will be opening up the SEP account. I know I had mentioned that last week and the week before, but M1 Finance really failed to meet my needs specifically. But it does kind of bring me to a subscriber question that I got this week. Very sincere question, introduced himself or herself. I'm pretty sure it was a male, but it kind of hit me up with the question of being concerned with the fees that new investors incur when they start their account. And it is a very real concern, because if you're looking to build that first 1,000 and that first 10,000 and eventually your first 50,000, which, take my advice, that will be the toughest milestone you'll ever get to. Most people don't ever try to pursue it, therefore they never get there. And that's a lot of the reason why a lot of people's worst enemy or their worst barrier is themselves, and that they just don't foresee themselves or can imagine themselves having greater than average riches in their life. And they don't want to take the steps necessary to put a plan in place to get to that amount. But back talking about the M1 strategy, I'm going to roll this out to you guys, and I hope you catch this strategy, because if I had it to do over again, and the advice that I gave back to this individual was to provide two options. The first option in reference to the fees that we're all looking to avoid at all costs, really the entry and exit fee. And this is really where M1 Finance has a step above the rest of the competition, in that you can invest in stock free of charge. It's a very, very good benefit. And I think a lot of folks can really take that and use that benefit to their benefit. Now, I know a lot of you guys know how I recommend that you guys enter into the stock market passively first. And I think M1 can really be a great tool for you guys to use in building up your first milestones, whether it be 1,000 to 10,000, and eventually get up to that $50,000 mark. And that way you can put yourself in a decision, okay? And what I would encourage you guys to do is, since you've built, a nice $50,000 baseline up in M1, that would be the time that I would look at initiating a fund rollover, okay? So you can do a self-directed retirement account through M1, that of which you cannot do through Robinhood. And this subscriber asked me, look, I want to save on the fees. I'm looking at Robinhood. I'm looking at M1. I'm confused as to what to do. Robinhood is not an option. It's nothing that I recommend on this particular channel for multiple reasons. I don't think it compares at all to the options and benefits that you have with M1. So if you did start that self-directed Roth IRA account, you could build it up free of charge, enter into and liquidate positions. Now, I don't want to see you trading in and out of stock. That's not my point. My point is that any transaction that you may incur between your voyage or your journey from $0 up to that first $50,000 can be enjoyed free of charge as many times as you do want to add to the portfolio or maybe take some profits off. Those moves aren't going to hurt you in the M1 account. And then at that time, you can look to transition and roll that account back over to one of the major brokerage houses. And I just want to let you guys know, I've recently gone through this process, and I'm not one of those guys that marry an account, okay? I don't marry a stock. I don't feel like I have an emotional tie to anything finance related. If I'm unhappy with it, I'll go ahead and switch. And I was actually unhappy with M1 Finance, because for me to go with M1 Finance, I get free trades through Merrill Edge, and I feel like I really wasn't happy with the aesthetics of the platform. To be honest with you, I didn't like the advertisement on the platform. Quite frankly, just preferred the aesthetics of the Merrill Edge platform better, and it's going to suit my needs better. So I just wanted to throw that out there for you guys, really to understand what it is I'm doing and why, and how you can kind of use the M1 strategy to maybe earmark down the line building that account up with the eventual plan of rolling those over. Now, a rollover costs you no money for the M1 account, and you can roll over into one of the major brokerage houses. And then what that's going to allow you to do is enjoy some of the incentive thresholds within that account. And that's really, really important for you guys as you get your portfolio built up over time. So, guys, I really want to welcome everybody that's new to the channel. I'm going to try to get to some of these questions that I've got in here. It looks like we've got a really robust group. Good evening to everyone. I hope you had a good week this week. I personally, I don't know if it was just my impulse, but I have a little bit of concern about what I saw, the market action this week. I saw the market have a nice attempt at a leg up. I was definitely not encouraged by Facebook. The action in Facebook today was actually fairly discouraging. To end the week on that note, I really thought I had that stock pegged at 160. It's looking like it's broken some technical resistance here, which is really unfortunate, and for no real good reason other than just technical reasons. And really want to let you guys know that, just to be careful, because I've got a lot of people that are hitting me up and they're excited about entering into the stock market. Unfortunately, for new folks entering the stock market, it may not be, the most prudent time, but I would still give those folks the green light to get an account established and started, as opposed to, some of the other folks that I'm talking about who've got, a $500,000, maybe 750,000, or even $1 million that's exposed to the stock market, the real interesting perspective that I've been kind of toying with is, when would the market tell somebody with a higher than average savings, let's say 500 or 750, when would it be prudent for someone like that to trim back? Is it ever prudent to do that? And I know this is really interesting and sometimes scary dialogue for a lot of people. And I've had a few folks, subscribers in the community, that they're in their 50s and maybe getting into their 60s, and they're looking to approach retirement. Is it prudent right now, with what the market is telling us, to take some off of the table, right, at that particular time and juncture, where for somebody that's starting out, irregardless or respective of where the market is now, it may just be as prudent for them to start in the market as for somebody else to trim some back. So you can kind of see there my perspective on no portfolio needs to be the same. And that's really a lot of where the confusion comes in when you're talking about the stock market and what is appropriate for someone. I came out with my video this week to really give you guys an idea of what my thought processes are holistically, so you can kind of take and make sure that you're aligning your particular plan with your particular needs and risk tolerance out of the stock market. If you feel like you're too overly exposed to the stock market, then by all means trim some back, because now is the time to start doing those, okay? Now, if you've got $10,000 in the stock market or less, my advice to you is to stay long on the stock market and look to exploit or build up other avenues to help strengthen your position in the market. But if you've got, some really good cash that's been built up over the last 10 years, or some really good appreciation within your account, you definitely might want to look at the prospect of trimming some of your winners back right here to kind of safeguard some of that cash. It's just never a bad idea to ask that question, okay? You can always exercise your right to hold stock going forward, but the idea is to always question that line of thinking and making sure that you're making those moves that are prudent. And if you've got the idea of taking some risk off the table to more be in line with what level of exposure you want to the stock market, then by all means, now is the time to start thinking about those ideas, okay? Now is not the time to start getting overzealous and trying to pick a bottom in Tesla, okay? We don't do that, all right? And that's basically all I'm going to say about Tesla, unless I've let the cat out of the bag within the community here, and you guys are going to start trying to pick a bottom in Tesla. But anyway, I'm going to try to get to some of these questions here. As a Canadian, I'm curious about the TFSA trading account. So I just broached this subject, and I wish some of my folks, my community members, I know I've got Noella in the line. I don't want to put her on the spot, but my understanding of the TFSA is that it's our equivalent, or it's your equivalent to our Roth IRA. And correct me if I'm wrong. There are some staunch similarities between those two programs. But I don't own a TFSA. I've spoke with many folks that are Canadian, and that is the equivalent of what you guys have. That's kind of on par. Remember, a lot of other countries don't have anything at all of the sort to compare what I talk about all the time with the Roth IRA. But it does provide some of that tax protection within that account. And I encourage you guys to use those. And that's what I know about it. Hopefully, Doug, you have taken advantage of using the TFSA to your benefit, because I'm fairly certain that the benefits are kind of online with what we have with our Roth IRA. I've got Uncle Skins here. I hear the dirt on M1. Using them myself, I can't put my finger on what bothers me. I love the fractional shares ownership. That was what turned me on initially, but the ability to sell just one asset kind of stinks. Yeah, it was a lot of different things, actually. I was actually pretty frustrated I did have the portfolio all built up. I did have their model portfolios identified. I liked that. Quite honestly, it just didn't make a whole lot of sense for me to have one anomaly, out here when I've got the rest of my financial picture on one screen. Now, that wasn't the only reason, honestly. It wasn't the fact that I was going with M1 to get the free trades, because I get that with Merrill Edge anyway. I was just confused on when I hit the sell button, or having to put the amount, the cash dollar of amount that I'm looking to realize to render that sale. And then the very next day I would look at the holding and it would have gone up a little bit, and I've got a few dollars left in the account. So I really didn't understand it at all. I'm probably down a few $100s actually in that, and I don't care, because I just couldn't track, what was going on within the account when I hit the execute button. Whereas in Merrill Edge, when I execute a trade, it's instantaneous. I see exactly what I've got. If I want to lock in $5 of profit because I can trade for free, I can do that. So just throwing that out there, I will be making a YouTube video on it. It will be a little bit catchy in that I'm kind of going against the grain a little bit. I know everybody else on YouTube, everybody and their mother wants to enjoy a bunch of groupthink, and I'm not really big on that. If I don't like something, I'm going to tell you guys. And I have no hesitation at all with initiating the transfer back process. It's a pain. It really is. And I would just offer this advice to you guys. If you can enjoy or avoid the pain of transferring accounts too much, it really just is that. I'm not saying it's impossible. You've got to email a few documents back to them. You've got to take a copy of your driver's license, send it back to them, get it validated. It's got to be signed. And then they've got to go out to M1, for example, request the funds back. And it's looking like it's going to take about 9 business days to make this liquidation happy for me. So if you can avoid that headache, I do encourage you to do that. I'm not discouraging you away from M1. It's just I'm telling you my honest opinion about my involvement with it, and quite frankly, my unhappiness with the platform. And if I were going to judge it on a scale of 1 to 10, I would probably give M1 Finance probably a 4. Okay, it would probably be just less than par for me for some very, very specific reasons. But it can work very, very well for somebody who's looking to get involved passively in a retirement account. The partial shares do come into play then, but look to implement one of my strategies, and then maybe you get it up to that 10,000